The content here is for informational purpose only and should not be taken as legal, business, or tax advice or be used to evaluate any investment of security and is not directed at any investor or potential investor in any Alphaswap podcasts.
Hello and welcome everyone. I'm King Uy and this is the Alphaswap podcast. Every week we'll be discussing a top investment idea from the platform and have an in-depth conversation with the user who posted the idea. You can learn more and join our community at alphaswap.io. This week, we're talking to Lucas Scott. Lucas, thanks very much for being with us today. Can you start off by giving us a quick intro about yourself?
Yeah, so my name is Lucas Scott. I'm from Ontario, Canada, and I kind of grew up here my whole life. I'm just about 19, just going on 20 soon. And I'm studying civil engineering currently, actually, at the University of Waterloo. So I'm kind of deep in the construction industry. I've worked a few jobs in it as well. And I've been following financial markets for a few years now, ever since I was about 17. And I've been kind of partaking in investing mainly for my personal accounts. And then as well, I've been doing a good deal in the past year for the Alphaswap platform.
Fantastic. Yeah, very excited about that. And can you tell us a bit more about your sort of philosophy and style when it comes to investing?
Yeah, so although I have kind of a few different investment positions with kind of a range of different styles and catalysts, I kind of like to focus more on an industry-based and sector-based approach when I look for a new investment. So I try and look for more undervalued industries that have medium to high growth potential. So when I look for a new investment idea, I tend to try and analyze a range of industries and find the one that has either not fully matured yet, something like, let's say, the renewable energy industry, or sectors that have been affected by economic downturns or macroeconomic shifts that kind of yield an extended sell-off. So what we saw last year in 2020 with COVID-19 pandemic, and still currently, we saw a lot of opportunities where some sectors that shouldn't have been affected as much from the pandemic were being sold off at the same levels as things like tourism. And so we saw a lot of great opportunities to get 30, 50% yields on some of these investments with lower risk. So then sometimes when I kind of believe that a sector is being oversold or trading significantly lower than its 200-day moving average, or all-time high due to a bunch of different factors, I like to compare the company's current stock movement against its historical recoveries from recessions or other different issues that have happened in the past. So I try and look at trends and find nooks where I have high confidence that I will cover and reach my price target. So kind of like when I had an idea once with Morgan Stanley, I tried to really compare it to its 2008 and 2009 trends and looked at how it recovered from an economic downturn and then compared it to just last year. And from there, I was able to kind of specify a nice price target. And then today, kind of my investment style and philosophy on this is really looking for an industry that a lot of potential room to grow. Look for one that has good evidence that it will be growing and that there is growing demand for it.
Gotcha. Makes sense. So can you tell us a bit more about the trade today then? What's the stock? What's the up downside? Any context? Love to hear more.
Yeah, so today we're going to be talking about Velodyne Lidar Inc. They're a San Jose-based technology company. They develop, test, and manufacture LiDAR sensors and systems for a variety of different uses across several different industries. So they were founded in 1983 and specialized in subwoofer technology, actually. But then in 2016, their LiDAR department split off so they could really focus on the development of 3D laser scanning technologies. They're currently trading for around $23 a share as of January 15th. And their market cap is hovering around $4 billion US dollars.
Gotcha.
And
sorry, just 1 second. Could you tell us a bit more about LiDAR? Just a few seconds on what exactly it is.
Yeah. So I can just go into, so LiDAR technology stands for kind of two things: light detection and ranging, as well as laser imaging detection and ranging. It was invented roughly 60 years ago, but it's undergone a huge amount of development. The technology has improved quite a bit. And so what it does is it uses lasers and it sends out pulses, usually within a field of view, sometimes 360 degrees. and the pulses then return back to the sensor, and we can get good topographic data about a surrounding area. It's got a huge range of uses, and every year we're finding more and more industries that have applicable uses for it. Kind of a few types of industries that are currently using them are things like corridor mapping, agriculture, defense, aviation, drones, UAVs, construction, engineering, mining, and then most importantly, which we'll talk about, is autonomous vehicles, such as things like self-driving cars. So the overall actual demand for LiDAR sensors has increased tremendously over the past few years and the past decade, and we're still seeing a huge amount of room to grow in the industry. So Velodyne only specializes in LiDAR sensors. That's Velodyne Lidar Inc. And they're therefore kind of fully supported by movements in the LiDAR industry. So it makes it a little bit easier to evaluate them and see how much room they have to grow and how they're currently being valued right now as of the actual industry.
And these guys, they would sell directly to the auto manufacturers and the power manufacturers, etc.
Yeah, so what they do is a big part of the business, especially in LiDAR right now, is contracts. So they'll be signing sales agreement contracts with companies or just development contracts with large auto manufacturers. So Velodyne has been signing a lot of contracts, and they have been even since around 2010. They've partnered with Google, with Caterpillar for the development of the production development of sensors for them, and then even just 2 years ago with Baidu, they entered in a 3-year sales agreement where kind of they provide straight to the client, and then they have a range of sensors which the client can either purchase large amounts of or want kind of an altered product for the specific use.
Fantastic. So why do you think the market is mispricing this stock, and what are the catalysts for the value to be unlocked?
Yeah, so I can kind of break it down over a couple different industries or sectors, I would say, in the LiDAR industry. So to start kind of in 2019, just 2 years ago, aerial systems accounted for roughly 50% of the entire LiDAR market. We're seeing even more exponential growth every single year as aerial vehicles become more advanced and widespread across the globe. But then we're also seeing a huge influx in the construction engineering industry. Applications like BIM, which is for construction design, is being used virtually at all major companies now, construction companies and contracting companies. And so companies are really trying to get a cloud-based approach to construction. And a big part of that is using LiDAR sensors, 3D scanning on work sites and places like that. And then we're also seeing governments requiring a lot of construction companies by law to actually use LiDAR sensors in the development stages and construction stages. So in the construction industry alone, basically from 2017, 2018, we've seen an over 35% increase in demand for sensors. And then if we move on to the autonomous vehicle sector, this one kind of intrigues investors the most because as I think they're kind of the greatest amount of room to grow. So demand for self-driving cars is increasing tremendously across the world. Basically, it's expected to grow for anywhere from 63.1% to 86.4% over the next 10 years. And that should equate to roughly 4.2 million units of actual self-driving cars. So a lot of auto manufacturers are even signing contracts and expected to be signing contracts over the next year or two for the mass production of these sensors. And they're becoming more reliant on these sensors, not only for self-driving capabilities, but even for safety systems. We've seen it even if anyone's bought a new car in the past 2 years, they'll see they probably have some sort of LiDAR sensor or 3D laser scanner on their car to detect other vehicles, lane drift, things like that, obstacles. And so they're being more prominent now in cars, and we've seen a reduction in cost in the actual units. Whereas 10 years ago, a LiDAR unit would cost from $50,000 to $100,000 each. Now they're $100 to $500 for tiny little ones you can insert anywhere in a vehicle. So we're seeing a lot more demand for LiDAR in the vehicle industry, and a lot of large and mega cap companies are starting to sign these contracts that are spanning anywhere from tens of millions to hundreds of millions for the development and the mass production of these sensors. And then we can kind of move on then to other smaller sectors. We're seeing a lot in the defense, agriculture, disaster and flood prevention, as well as in smart traffic systems now in big cities. So we're seeing a lot of also government and military contracts for around the globe for powerful and compact LiDAR sensors for the use in UAVs, guided weapons, and surveillance. And then even just last year, the US government signed several different contracts for the 3D LiDAR imaging of many parts of the US for topographic data. It's expected that even just this data will provide roughly $13 billion in annual revenue to several different industries in the next 8 years.
Gotcha. So you think certain strengths in the market is underestimating the potential growth of the technology?
Yeah, so I kind of believe that the market has been lagging a bit in seeing the potential growth in LiDAR, because we're expecting the actual LiDAR industry currently sits around 1.1 billion and expected to grow roughly by 10 billion within the next 10 to 6 years. So I think a lot of these companies are being undervalued, such as Velodyne. So I kind of went through few different metrics and ways to evaluate Velodyne to try and get my best estimate as to where I think their price is going, how they're valued right now, and basically, see the future for it.
Gotcha. And maybe expand a little bit. What metrics do you think is relevant here, and where do you set your price target because of that?
Yeah, definitely. So Velodyne currently has a revenue stream of roughly $96.5 million US, and they're sitting at quarterly annual revenue growth of roughly 137%. As mentioned earlier, market cap's around $4 billion US. However, it is important to note that they actually are not making net profit right now. They are currently running a deficit around 60 million US a year. However, when trying to look at kind of how investors felt about this over the past 2 years, the stock has been increasing pretty linearly over these past 2 years, especially over the past 12 months, with an increase of about 125% in stock price. So investors are feeling pretty optimistic about Velodyne, but I still think it's being kind of undervalued. And especially since Velodyne currently has net debts of around 10 million US dollars and roughly 300 million in cash on hand in the company. So I think this gives Velodyne a healthy amount of money to be able to continue R&D research for the next couple of years, develop new products. And we're going to see a lot of contracts being signed, which will give a steady revenue growth over the next few years.
Gotcha. Okay, great. And maybe while we're on it, a bit more of the metrics on the stock. What are the relevant metrics, and what is the magnitude of those?
Yeah, so I kind of choosing the right metric was a little difficult for a company like Velodyne, since sometimes it can be difficult to use some standard metrics when you're looking at a younger company. But I decided to really take a focus on revenue growth, and then, like I mentioned, net debt and cash flow, and then try and compare it to kind of other leaders in the same industry. So a very popular company, many people might know, is Laser. It's been in the news quite a bit, and they're sitting at a market cap roughly about 10 billion US dollars. So when that compares, it's about 2.5 times that of Velodyne. However, they're making roughly 17 million in total revenue, and about 80 million less than Velodyne, and sitting about half the cash as well. So then if we kind of take the metrics of, we look at a debt to kind of cash on hand ratio, we're looking at about 30-to-1 ratio for Velodyne, and then about I would say, I think 6-to-1 ratio for Luminaire. And then if we look at their current ratio, and then as well as their total debt to equity ratio, for Velodyne, we're looking at about 5.93 and 3.61 respectively. And then for Luminaire, about 9.93 and 19.88. So we're kind of seeing how Velodyne compares to other industry leaders in LiDAR. And we're seeing that they're kind of put in a little bit of a better position, and they run less risk of being currently overvalued, since Luminaire is sitting about 10 times that of its underlying industry, and Velodyne sitting at around 3 to 4 times that of its underlying industry, we're kind of seeing it's a little more healthy position and allows for a little more room to grow over the next couple of years.
Makes sense. And what do you think are the main risks and any mitigants to those risks?
I think the main risks for this position are definitely competition. We're seeing a lot of new tech startups in places like Silicon Valley that are trying to push their way into the self-driving industry. Not only just making vehicles, but we're seeing a lot that are trying to make LiDAR sensors for these vehicles. And so every year we're seeing a little more competition. But I think what Velodyne kind of pulls ahead here is they've been doing these sensors for quite a while, and they're currently one of the leading manufacturers currently in the US and globally, which I think gives them a little more edge against these startup companies in terms of even just finding capital and funding and trying to chip away at a currently small industry that will be growing later on.
Gotcha. Super interesting. So finally, what we always do is end with some more personal questions on the investing side of these. So there's 3. Which resources do you use for your research? What's your favorite investment book? And what's the most important investment lesson you want to share with our audience?
Yeah, so I think my favorite kind of tools for investing, or just looking at financial information, I use a lot of Yahoo Finance. To be honest, for me, I get a lot of the information I need from it. And then I use a few different charting websites, things like TradingView and stuff like that. Mm-hmm. And then when I'm really looking for company information, I'll just go into SEC filings, and then as well as just on company websites into investor relations, things like that. As for my favorite book, I haven't actually read that many. Surprisingly, I've read excerpts from a bunch of different ones, but I'll have to, I think, go with the most basic one here, and is The Intelligent Investor, because that was the first one I read. And to me, I felt like that gave me probably the best foundation for starting my interest in investing, and kind of a way to control my emotions and a way to get a better, more factual look at investing and finding new companies. And then for my biggest mistake, we've all been there, but I think my first mistake was definitely one where I forgot or I should have known how to exit a position when I told myself I would. So just last year, or before 2020, I invested in a company in the airline industry. And I had made maybe 15-20% on it, but I knew I didn't want to stay in it. I thought it's too risky. If something bad happens, I'm going to lose, this position. I'll be too deep in it. So I said, I'll sell it by Christmas time. And then lo and behold, I told myself, you know what, I'll keep it for a couple more months. And 2 months later, we had the COVID-19 pandemic. And even then, I just kept holding on to it, thinking it'll come back one point. And I think greatest lesson I learned was sometimes when you set times where you should sell or close a position and move on, you should definitely follow those and stick to those, because you really don't know what will happen in the future.
Great. Yeah, we've all been there when sort of analysis turns into hope. So great.
Yeah.
No, thanks very much for being with us today. Very interesting trade and insights, and really appreciate it. Thank you.
Thank you very much. Take care.
Thank you for listening to the Alphaswap podcast. If you'd like to read more about this trade idea, please log on to alphaswap.io. On the platform, you'll also find lots of other interesting trade ideas. Look forward to the next episode.